gold looks like it could break into the 1600s, and silver, kind of looks like it could hit $16. Maybe by the time this video is over. I don't know. I'm exaggerating, of course, but what gives here? What?
Yeah.
Wait a minute. Are we anywhere near the bottom?
This is very, very important, Yankee. Okay.
Hi, Mukarram. Welcome back.
Yankee. How are you?
I'm doing great. And for those of you new to Mukarram, let me just introduce you. You are the head of trading at Bullionite. You're the chief investment officer at Blackstone Commodity Group. Mm-hmm. And by the way, that's not related at all to Blackstone Inc., the world's largest private
equity group is different.
That's different, right? They're in New York. They're massive.
Yeah, they're like a market moneymaker,
Exactly.
So
Right. You focus your talents on commodity investments and
alternative assets.
Alternative assets, yes. Yeah. And guys, here's the deal. This is why I love having you on my channel. Unlike many investment advisors, you love precious metals, physical, gold and silver.
Yeah.
I asked you to bring some tonight. Too late, right?
I'm so sorry.
That's okay. I know you're in the office.
Stacks, the stacking that I've done, I love showing, sharing it with the audience. But I'm so sorry I couldn't bring any today.
It's okay. We love seeing it next time. Bring some hefty stuff. We'd love to see it. But the second reason I love working with you is that you have helped many of my subscribers diversify their portfolios into gold and silver, among other assets.
Some people want to have a lot of precious metals versus others who want to have a certain amount, right? And in your case, you're trying to go from 10% to maybe 15% slowly. Right. I think that's why a lot of clients love working with us, because we want to spend the time and kind of understand what their overall goal is,
Yep. Let's talk metals and markets, Mukarram. Okay, I hope you're ready for this, dude, because it ain't gonna be pretty. It's been ugly since the last time we talked back. I think it was late April. Silver had dropped to, I think, $23 an ounce. Gold was at $18.90, I believe, close to $1900. Those prices sound like super high right about now, huh?
Well, I mean, here's the important thing. Okay, I know a lot of people, I think even individuals, are saying, well, why has gold come down significantly? Or some people even dare say the word, maybe metals are in a bear market. First, let's correct this. This is very, very important, Yankee. Okay. First of all, year to date, gold has dropped about 5.1%. Okay. The S&P 500 is down about 19.5%, and the NASDAQ is down about almost 28%, 27.4% or so. Okay. So gold is acting exactly the way it's supposed to act. It is performing its function of a portfolio hedge. And at times, especially in the last year, it has outperformed most assets. So this is a very important thing to keep in mind. Gold has come down from that 1900 plus, almost 2000 level, to around 1740 today. But if you look at the commodity itself, and with all of the pressures that you're having around it, gold has performed significantly well, and it's holding true to its character of being a portfolio hedge, when across the board, like IRAs, 401ks that are completely exposed to the stock market have dropped. A NASDAQ almost 28% and S&P 500 almost 20%.
Gold looks like it could break into the 1600s, and silver, kind of looks like it could hit $16. I mean, maybe by the time this video is over. I don't know. I'm exaggerating, of course, but what gives here? What?
Yeah.
Wait a minute. Are we anywhere near the bottom?
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
Has it reached kind of a short-term to medium-term bottom?
This is gold.
I really
looking
think
at
so,
right now. Yes.
because of this support zone right here.
All right.
So we've kind of reached that. And if you look at the last week and a half or so, you saw most of the days we had big moves in gold, right? Especially a couple of days ago, a massive move. But we had a very small candle that happened yesterday, and that's called an inside day. Okay. And an inside day means that there's an exhaustion of selling. That's what's happened, right? And then that's also a sign, because when this candle stopped right at this support zone, right? What's interesting is if you look at this chart, and I can magnify it a little bit, you see how like the length of this candle was like almost like $80, right? And then you have these big days, like $30-$40 days. But then suddenly, after this exhaustion of selling, you saw a very small day. Usually when you have a big red candle like that, and then you have another small candle here, this is a sign of exhaustion. That means the selling is coming to an end. The other thing is when the shape of the candle looks like this, it's called an inverted hammer, like you invert a hammer over, right? And that usually means after a downtrend, it needs a reversal, okay? And usually what you like to see is the next day, the market take out the previous day's close, which is already happening today. You know, You can already see that. And that's why when you ask me the question, hey, do you think there's a kind of a short-term bottom? I really think so. And the reason why we're saying this is a very strong support area is most of the time, like that's where it's returned from, right? It's come back quite a bit. Now, I'm not saying, hey, everything's clear. But here's another thing to realize. I forgot to mention this. The summer months are usually weak months for gold and silver. This is the months that we usually like to accumulate a lot of gold and silver because you'll see a seasonality in gold, okay, and silver, precious metals. Just like there's a seasonality in crude oil, doesn't mean it's going to do the same thing every year. It just means that over years, there's a seasonality where, price gets pressured during summer, and then early fall to going into winter, it runs up significantly, okay? Even on the weekly, it is coming into a kind of year and a half's worth of support zone. We really would like to see gold hold this support area somewhere in the like the low 1700s and then turn around. What I like about gold right now, and even if there's a little bit more of a pullback, is that on all time frames, it's gotten oversold. That's another technical point to remember. So if you go to a daily chart, you can see that the stochastics all the way down is like right at the bottom.
Right.
Then if I change this into a weekly chart, the stochastics is also right
there. Yeah.
Okay. Which I love, because now a medium-term chart is showing you that it's oversold as well as the daily chart. Gold has not done any damage to its chart, and gold is just going through some of the pressures that is introduced to it because of high interest rates and a medium-term strength in the dollar. No matter how you look at it, just straight up, gold has only dropped 5.1% this year versus almost 20% in the S&P 500 and almost 28% in the Nasdaq.
Silver's a lot more than that, though, right? Silver's been obliterated.
Oh, yeah, definitely. Silver's always volatile, right? Silver tends to pull back more. Silver breaking the 20 is not the best thing for us. But even in this chart, you can see that it's not even close to showing you a sign of a technical breakdown. It's just coming and testing a previous resistance zone. We're talking about resistance here, which kicked it back, then resistance here, we kicked it back. And usually what a market does is when it breaks its major resistance zones, it will go up, come back and retest its resistance zone before it begins its next ascent. Okay, so that's why I'm not that worried about silver, even though a lot of people, may be worried. I am not, because it's just doing what it's supposed to do. Like, for example, if you go back to before that big, massive, 400% run in silver, it kind of did the same thing. This was the resistance zone, came down, hit it, resistance zone, came down, then broke through it. You see that? Then came back, tested it, and then turned around. So we could go as far as this area and still be fine.
What is that an ounce where you see? I can't see the numbers.
This is around where we are now, right?
Yeah.
And then if we were to break lower,
Yes.
we could possibly, like you could draw a line right in the middle of the congestion area.
Yeah.
That's about maybe 17 and a half or so.
17,
Because
maybe near it.
this is the beauty of having gold and silver, physical gold and silver, not paper gold and silver, physical gold and silver. This is the best way to do it for you to understand it is over time, because of inflation, because of dollar devaluation, even though you've had dollar strength, you can see that relative strength of metals has increased, right? So over time, a physical commodity will always find a way to go higher in price, not the paper instrument, because it's priced in dollars. Keep this in mind. The dollar is not strengthening because our economy warrants it or our,
Good point.
growth or GDP warrants it.
Yep.
Okay.
Nope.
The dollar is strengthening because we have a Fed that is very hawkish and is very restrictive on how they want future monetary policy to be until they get this inflation in control. But we got to say that with some caution, because here's what people are not understanding. You want to look at the relative strength of gold in this dollar run or the dollar hawkishness. Why do I say this? Because if you go back and look at a chart, and we'll show this, the dollar was the same amount in March of 2020, the same price level. What was the price of gold at that time? Around maybe 1540 or so. Okay. And then in 2017, January, the dollar was again the same price point at about 107. What was the price of gold around that? Around 1140. What's that saying to you? That gold has become increasingly strong in the face of dollar strengthening. Because you would expect the price of gold to be around $1,400 right now, but it's not. That's very, very telling, because what that means is, and here's an important point, I hope the audience can, and I hope I can do a good job explaining this. Whenever the Fed, even if you go back to the Bernanke years or Greenspan years or any one of those years, you'll notice that when the Fed gets on this path where they want to be extremely hawkish and they want to raise interest rates, there comes a point, something called a Fed terminal rate. Okay, I'm going to repeat that again. It's called the Fed terminal rate. What that is that it's the rate against how high the federal funds rates could actually go when there is a risk of a recession, or if you have a historically high debt, government debt, and maybe even deflationary pressures if you have leftover inventory that might build up. So in other words, I can assure you that even if they raised 75 basis points in the last meeting, and they did have a less than hawkish, like the minutes came out yesterday, it wasn't as hawkish as we expected it.
Right.
Even if they do a 50 basis point hike in July, what you can see is by the end of 2022, early 23, they're going to have a terminal rate stopping point where they will not be able to take control of this inflation.
That's the pivot. That's the pivot point, right?
A significant increase in the price of gold. This is the dollar index. And you can see how the dollar has kind of had a significant run up, broken through a channel as well. And today, as we speak, is around 106.5, 107. And if you just kind of draw a line like that, you'll see that this high was around 2002. That's what it is. Okay. That's why they say it's a 20-year high, which is a great thing, because most of the time when the entire media talks about something being at an extreme high, guess what usually happens? It comes down. Right. And then if you look at the last time we were close to this region, which was March 2020, right? And then we were close to this region again when, the last time was 2017. You can see that, January 2017. You have a massively overbought on a monthly chart. You see how overbought this is?
Sure.
Whereas in gold, you saw how it was here?
Yes.
So that's when this changes or inverts, that's when you'll start seeing the progression. When will that happen? When you get a indication of where that terminal rate might be. But the fact that gold has such strong relative strength against the dollar, when they've raised, like the last 75 basis point hike was the highest since 1994 in a one-time meeting. You understand that, right? Even when they did that, gold's still $500 higher than where it was when the dollar was exactly at this level. You have a group of fundamentals right now that can cause the stock market to come down as significantly as it did in 07 to 09.
Wow.
And this is what we were preparing for, even though it was a little late, right? All of last year when we were helping a lot of your clients, Yankee, or a lot of people from the audience, when we were getting out of stocks, one part of it is happening now. The market's dropping significantly.
Yep, you were right.
What has not happened is gold catch up and run. And we talked about that because when the stock market drops significantly, you have margin related liquidations. You want to get out of something that's gone from 1,500 to 2,000. That's going to happen. And then after it settles itself, when it has shown you very, very accurately that, hey, I'm way stronger than I was in 2017. I'm way stronger than I was in 2020. When this happened, that's when the terminal rate starts hitting, you'll see the next big run up.
What do you
Silver
think?
has been relatively weaker than gold. We have to say that, but gold, I'm not at all worried about it at all.
Well, a couple things. One is, where do you think that terminal rate is?
Probably the hint for where that terminal rate can get to will be based on this month's meeting. If they don't do a 75 basis point hike, because when you trade futures, there are expectations on bonds like, will there be a 75 basis point hike or will there be a 1 point hike? There's a good portion of probability assuming a 1 point hike or a 75 basis point hike. I don't believe that's going to happen. I think if there's a 50 basis point hike, they are communicating very, very clearly to us that they're coming close to not raising interest rates and that much more after that.
Don't you think they're going to have a lot of political pressure to stop as this recession deepens?
Well, that's a very, very interesting question because we're coming in, and as usual, right, because of the way our country is organized in terms of our election cycles and the presidential and the congressional election cycles. And also, we noticed something very, very interesting, and we've been tracking this for quite a while. For the first time in history, the FBI and the MI5 had a press conference together in the Thames House in London, where they talked about all of the risks of China, like right out up front. They just outlined it. And listen to this, Yankee. This is very, very powerful. The FBI director, Christopher Wray, he said that the Chinese government poses the biggest long-term threat to economic and national security for the UK, the US, and the allies in Europe and elsewhere. I mean, out there, And he went on to say the Chinese government is trying to shape the world by interfering in our politics. And he even mentioned what they did. He said Beijing had directly interfered in a congressional election in New York this year, as it did not want a candidate who was a critic and a former protester at the Tiananmen Square to be elected.
Goodness.
Okay. And look at this part. He said, speaking about Taiwan, remember, most of our audience loves Taiwan, right? Loves Taiwan. I mean, they want to find out about what Taiwan means to this whole conflict. Look at what he said. Speaking about Taiwan, which China regards as a province, Ray said that China may try to forcibly take it over. And if that were to happen, it would represent one of the most horrific business disruptions the world has ever seen. I've never heard this. Up front, out there, two directors of the biggest, units in very developed countries, right, or powerful countries, coming out and saying that way. And this was the first time they had a joint conference, the MI5 and the FBI. So remember that. I mean, that's a big deal.
Are we in a recession right now?
Definitely.
Okay. If that were to happen, is that the reason why we're seeing silver get clobbered? And is it going to turn around?
It's come down from 23 to 19.
Yes.
In 2.5 months.
Yeah.
Whereas oil came down $10.50 in 1 day 2 days ago. Sorry. So there's a big difference.
That's getting hammered.
Yeah, that's getting hammered. Silver's not getting hammered, okay? It's just staging.
It's all relative.
Yeah, and this is why we like building a position in silver. The closer you are to the $20 range, I always love building a position in silver, right? But now, if we have gold pulling down as silver pulls down, I would prefer buying more gold at this point until silver takes over the $20 handle again. Does not mean the silver eagles have come down that much in premium. You know that, right?
Yes.
Or the gold eagles have. They've just fluctuated a little bit.
How are you advising your clients now?
Number one, the highest priority, if you look at it as a task-based priority, because that's how you have to do this, okay? Number one priority is protect your money from a massive drop in the stock market. Because any bounce, don't get fooled by a bounce in the stock market, because bear market, already the market has defined itself as a bear market, right? More than 20% in the NASDAQ, almost 28% in less than 6 months. So what it's saying to you is bear markets will have kind of vicious bounces, but you got to get out when you see those bounces. Like if you're the type of person saying, you know what, I think it's come down a lot, I want to hold on a little bit.
Buy the dip or buy the dip.
Do not buy the dip. Do not buy the dip. Okay, this is not buying the dip at all. You'll be in a very, very bad place if you do that. So this is why when you work with a group like us, right? You and me, everyone helping us as a family together, we're working. You'll understand that any bounce in this market, use it as a way to get out. We all know that the stock market has gone up for almost 12 plus years. Most people that I speak with, if they have an IRA, they have a lot of stocks in there that have gone up significantly, right? So the best time to do a transfer is when you get out of stocks, okay? Because guess what? Unless you take the money out of an IRA as a distribution, you don't pay any taxes. So you can sell out of your stocks at very close to the highs. I mean, even though we're at 32,000, Dow, it's still high compared to where it could go, right? So you can protect all of those gains. And guess what? You do a lateral transfer of that cash into a self-directed IRA and then buy an asset that can go up when the stock market comes down. Instead of giving up all of those profits, you can now grow your IRA multiple times over the years by doing what's called asset class rotation within your IRAs. The way you do that, and we help you with that, if you get in touch with us, we have your phone number there. My direct number is 949-200-7047. My executive assistant, Nicole, I think Yankee has all of the information. He does a great job in giving the information to the clients to reach out to us, and we will love to help you and explain this to you. But why this is so powerful is you don't have to be this individual that gets older and older and only gets 5 or 6% return or 8% return when you can grow your money by multiples when you do asset class rotation. This is what hedge funds do, right? Hedge funds get into a market that is completely oversold or not attractive, then let it run up significantly, and then they get out when the retail is trying to buy it, and then they go into another asset class. You can do that inside of your IRA without paying taxes. That's what's beautiful about it.
That's great. Well, hey, I'm going to include your info. Check it out in the description of the video. Mukarram, always a pleasure. Thank you so much.
Thank you, Yankee. Appreciate it.